you guys were on last Monday. Thank you for coming back, Melissa, um, and and Fiona. And what I'm going to suggest is what we do every week is we're going to go around the table and we're going to introduce ourselves. So my name is Adam Cohen. I'm the CEO of Adam Cohen today, also of Sachs and Spencer Capital, Sachs Cap Inc., and coming soon Smash Mortgage. I've been in business for 30 years or more, running my own business with highs and lows and the scars to prove it. And it was my brainstorm that I would get my business community together on this forum once a week to talk about things that we are addressing in business. So I'll let Fiona introduce herself and then we'll go around the block.
Hi,
Great.
everybody. As you know, my name's Fiona, and I'm Adam's sister. And I've been working with the business for a couple of years now. And basically, what I do is I work behind the scenes on marketing. I create posts, videos, and do advertising. And also connect Adam with interest for the business. And I'm really enjoying it. And I hope to be with the business for many years to come.
That's great.
All right, so gentleman with the blue shirt, I didn't get your name. It says Samsung SM. I'm
Uh,
guessing that's not your name.
Oh, I'm sorry. Yeah, I'm actually doing this from my mobile phone. So if I cut out, I apologize in advance. My name is Julia Lombardi. I'm a commercial director at ACMS Commercial Direct. I've been in the business probably for about 30 plus years now, handling everything from commercial lines for 1 to 4 family investment properties, ground up construction, you name it. If it's CRE related, we do it. And I'm happy to be with you guys here today and look forward to brainstorming with you guys.
Thank you very much. Thank you for joining us. Melissa, over to you.
Hello, everyone. I feel like I should have an accent to be on today, but I don't, so I can fake one, I guess.
Go ahead. You can
My name
try.
is Melissa. Yeah, exactly. Horrible. I am CEO and founder of Scorpion Alchemia and Lineage Architecture. Been in sales of one form or another for 35 plus years and business as well. And yeah, I guess I'm just happy to be here today. So that's what I've got for you on this very fine Monday. So nice to see everyone. Nice to be here again. Thanks, Adam. Good to see you, Fiona.
Nice to see you. Thank you for joining.
All right, Jeff.
Hi, my name is Jeff Ackerman. I'm CEO of Rise Architecture. We started about 20 years ago. Today we are in 19 states. On top of that, I'm CEO of Jack Jeff Permit Services as well, and a couple other development companies that we run at the same time. Glad to be here and see what I can learn.
Okay, Andrew Hannah.
Hey guys, can you guys hear me?
Yes.
Yes.
Okay, nice to meet you, group. I'm here, Andrew Hanna, president of Global Premier Development, president of Global Premier America. I've been in the development space since year 2000, incorporated Global Premier Development in 2004.
Are you there? Sorry.
Developed several thousand units. Say that again?
Oh, we lost you for a second.
Am I cutting out? Am I cutting out?
Yeah.
So I've developed hundreds of millions of dollars of both, family apartments, senior apartments throughout the state, mainly ground up construction. My other entity that I'm a president of, Global Premier America, we're ground up primarily for assisted living, memory care type facilities. That entity does bring in foreign investment as its equity component in those type of transactions. And, I'm just trying to see if there's any synergies here between anyone. I bring a lot of loan experience, development experience to the table. And I was telling Adam on the side that I'm here to If anyone has any deals that pencil well, I'm happy to sign on construction loans with them, leverage my current portfolio. More specifically on family and senior apartments, but we could also look at healthcare related type project as well if a deal pencils out. But nice meeting everyone here today.
All right, thank you for joining us, Andrew. And by the way, there's like maybe not this week, but off and on, this is a significantly real estate kind of group, but it wasn't targeted just towards real estate because we can learn so much from other industries that can benefit us, help us, educate us, and we can learn from. Moving down the list, we have Dan Max. Oh, Dan actually messaged me that he can't be on the call. He is listening in but can't participate. Sorry, I'm just going down the list here. So Benjamin Gross, I see you. Benjamin Goss. Thank you for joining us today. Can you tell us are you able to participate with us during the call? Nothing from Benjamin? Okay, well, you're welcome to listen in.
Sorry, I had to get
Oh.
to the the bottom of the queue there. It wasn't letting me pull up the directions there. Sorry, I'm just a lowly guy running around doing 1099 work, providing freelance support in a variety of ways. Fractional CRO, full-time roofing director, storm damage restoration. I do a lot with insurance and construction where all that stuff kind of comes together. So I happen to be in Kansas City today. I'm based out of Florida, so I've been working off and on in about 22 different states, depending on what hits my fancy and what clients are pinging the meter.
Okay, sounds good. Well, thank you for joining us today. Herzl just messaged me that he's not able to participate. He's just listening in. And then we have Christine Ladney on the line. Christine, are you able to participate or are you just listening in today? Okay, well, everything good. For those of you who are just listening in, thank you for joining us. Your presence is greatly appreciated. Oh, there we are.
Sorry, I was having some technical difficulty.
Yeah, I think we all were today.
Hi, everyone. I'm Christine, based in New York City. I invest in multifamilies, mostly interested in the Midwest right now. And I also work a W-2 at a bank, so I have a banking background.
Nice. What kind of banking background is that like? Customer service, advice?
No, I'm in the commercial lending group. I'm in special assets,
Mhm.
restructuring troubled commercial real estate loans.
Interesting.
Okay.
I also have a bit of experience in restructuring troubled commercial real estate loans. So, but in the private sector versus banking, it's been I guess, a significant part of my professional life doing that. So last week we spoke about startups and we spoke about AI. Today, continuing the kind of digital approach, we're going to focus on blockchain. I, as a business owner, as a private lender, as a real estate investor, believe that blockchain is the way forward for real estate investing. I think the banks are going to be scaling back who they are willing to lend to, how often they're willing to lend, and the type of loans they're willing to do, which will make real estate investing significantly unaffordable for the masses. I think blockchain is a great alternative, and I'll go into some of my reasons why after I've let you guys have a chance to speak. I think blockchain is the way of the future of real estate investing, especially for the younger generation. And I'd like to know what you guys think. And let's start with Mr. Samsung. I forgot your name, sorry. Blue shirt, glasses, top left. Did anyone catch his name? I'm sorry. The gentleman in the blue shirt and the black glasses, the grey hat on his phone. We can't hear you.
Can you hear me now?
Oh, okay. Sorry, can we repeat your name again, please?
Giulio Lombardi.
Julio, I'm going to write it down so I don't forget it again. Sorry. Julio. So Julio, what is your opinion as how blockchain is going to be affecting, all right, gargled my words there, affecting the future of real estate investment?
I really haven't given it much thought, to be quite frank. Most
Oh,
of my
Julio.
investors, I'm sorry. Oh, excuse
Or
me?
quite, you can be quite frank, or you can be quite Julio.
Yeah, I mean, it's not something I've really have encountered, to be quite frank. And it's not something I think from the investors that I deal with are kind of moving towards.
Okay, Melissa.
Well, for me, it's not that I haven't given it much thought, but I think that the entire infrastructure would have to undergo something massive in order for something like this to begin to happen, which, as far as infrastructure change and the way that the world is going, uh, for me to weigh in on it would be merely a projection at this point. And I feel like there's so much uncertainty around that arena that it would be nice to see something in the way of a new financial system and have an understanding of that coming forward that could benefit everyone. And so that's where I'll leave it. But I appreciate
All
the
right.
question. Thanks, Adam.
Thank you, Jeff.
I haven't really looked into it much. It's a little hard for me to weigh in on something I haven't looked into that much, specifically since I don't know how it works. So I would ask you that you mentioned that you think banks will stop lending, and therefore blockchain is going to be the way of the future. I'd ask you why you think that's the case, because I don't see anything slowing down anytime soon.
Well, it's an opinion, but we are moving towards a digital currency. We are moving towards more government control. BlackRock have said they want to ban home ownership and investment ownership and real estate ownership. A company as size as BlackRock, when they start saying things like that, we can't ignore them, right? They're the biggest hedge fund in the world, and if they're saying that they don't want us to own anything and we should be renters of everything, we can't ignore that. We have to look at the young generation of real estate investors. They're not as sad. They're not hard workers. They don't want to be on the ground building houses. They want to be very much so on their laptops, investing in one thing, investing in something else, and trading and doing everything easy. When you look at getting a loan for, say, an investment property, you could spend quite a bit of money and not get the loan, or you could spend quite a bit of money, maybe several times before you get the loan. And then, you have to worry about tenants paying mortgages. You have to worry about the impact on the tenants not paying the mortgages and the borrowers being ability to pay. And I think as we look forward, I think banks are going to make it harder and harder for the people. For example, listen, wealthy people are always going to be able to invest in real estate, no doubt, right? Like those of us that have been doing it for 30 years, that know the tricks, the tricks of the trade, we know our way around a building. I think for us, that probably is not going to change anytime soon. But for the 20, 30 somethings that want to invest in real estate that don't have the credit or the cash or the experience, I think investing in real estate through blockchain, through fractional ownership and real world assets in a regulated commodity, I think that's going to be a very big way forward. And I think as we move forward over the next 5 to 10 years, and the banks wanting to control more and more and more, and the hedge funds wanting to control more and more and more, I think the opportunities for the common man are going to be significantly less. And I think the upside of investing in real estate through blockchain, through a fund of some kind, is definitely significantly more advantageous as far as less risk and higher return than investing in it directly and seeing so many foreclosures as we do in the real estate business. It's not unreasonable to suggest.
I hear. My one point follow up with that would be is what's the difference between that and fractional ownership that they do now on different funds that they do already at this point?
Well, it's the flexibility and the ease. For example, there are many real estate investment groups that people invest in. It's usually high net worth individuals that are investing hundreds of thousands or millions into those funds. Yeah, you have your small partnerships, 50,000, 100,000, a small group of people that will go into a real estate deal. But oddly enough, those are some of the ones that have the highest problem rate. The advantage of going into through tokenization is, number one, the tokens are tradable in the secondary market, which means that you can sell those tokens and you can profit on those tokens. Those tokens pay a yield, and everything is completely regulated, or is becoming more and more regulated by the SEC, especially with the new Transparency Act they just filed. And it gives developers the opportunity to raise money in equity that's pretty much illiquid. And it gives smaller investors the opportunity to invest in larger projects that would otherwise be unavailable to them. I'm actually a big believer of tokenization, blockchain, and fractional investments into real world assets. I actually am a big advocate of it, and I plan through one of my new companies for being a huge ambassador for it to get young people investing in real estate, but through crypto, through blockchain, as opposed to through conventional means.
Yeah. We'll see how it
Interesting.
plays out, I guess.
Indeed. Indeed. All right. Thank you for
I had
that,
some
Jeff.
thoughts, if I could jump in.
Go ahead,
Um,
please.
From the banking perspective, I mean, banks are so highly regulated. We move so slow. We're, first and forefront, you want to minimize risk, downside. Um, I feel like I'm living in a different planet from people that work in tech that are vibe coding and things like that. I just feel like we're just so antiquated. We are adopting some things, but it's moving slower. I could see like private equity or something embracing it a lot faster. My friend is building an exchange that's basically blockchain for selling real estate. And one of the challenges he mentioned was something about how owners of the real estate don't like all of their numbers just being out there, their rent rolls and everything being there for everyone to see. And I can kind of understand because at a bank, we kind of see that a lot of landlords have two rent rolls. There's the one that they submit for taxes and the one they submit to the bankers. So maybe that's, something that has to do with it. So there's like little things like that that would affect the adoption of it.
And that's a very good point, by the way, that you raised. But having said that, for example, how many of us know people who say to us all the time, hey, I've got 50,000 or 100,000, I want to invest in real estate. But we all know that investment in real estate on its own is most likely not going to be successful, right? If they get a loan and they're struggling to pay the mortgage, if they have a tenant that doesn't pay, if they're doing a rehab and the project takes longer and costs more, that hurts the project significantly, which significantly impacts borrowers. And it's where we see so many foreclosures popping up all over the country. It's one of the highest failure rates, let's call it, in real estate lending. But for example, let's just say you had the opportunity that you had $50,000 in cash and you want to invest in real estate, and there's a very good project going up, there's a new development, and you have the opportunity to take that $50,000, make a double-digit return, make it with a SEC regulated company, and get maybe 2.5 times return on your money, and you don't have to apply for a mortgage. You don't have to make any mortgage payments. You don't have to pay any costs. You go on your phone, you qualify, right? You select what you want, you select the amount you want to pay, right? You put in your account information and boom, you've done it. You've invested in real estate. You are now a real estate investor, only you don't have any other labor paid. And as Jeff mentioned, it's what they do with a lot of the bigger funds, but a lot of smaller people don't have
Crowdfunding.
the ability to invest in those funds. And there's so many options on the market. How do you know who to trust unless you go with a company or a name or a brand that's got the recognition that you feel comfortable with? So this is why I think blockchain is going to play a very important role in real estate with companies that develop good reputations, because they're going to become, Fiona would know, the Barretts of England or the Lennar of the US. People are going to want to invest in those projects because typically they're not open to the public, but through blockchain, now they are. Right? And not only are they making their returns on the real estate, they also have the ability to trade those tokens on the secondary market, which, now there's not a lot of excitement about real estate deals on the secondary market, but people do buy yield, and the more the project appreciates, right, the greater return those tokens will ultimately make. So they do come quite desirable. It's like buying, it's like Bitcoin isn't backed by everything, but everybody buys it. So, and blockchain doesn't necessarily just have to apply to real estate. It's becoming a way for which many private companies are raising money to build their companies, grow their companies. And what I've learned about blockchain is you could create a token and no one will buy it, but if you do want to sell it, then you have to spend quite a bit of money in legal, regulatory, marketing, distribution, third parties, etc., so that people know that you exist. But if you've got the time and the $500,000 that it takes to spend on that, then you're going to have a pretty successful token. And if you have a successful token, then you're going to have a pretty successful project or company, whatever you're using it for. And I think the more people become familiar with blockchain and tokenization, the more we're going to see this not just in real estate, but in many other industries. I think right now people are still nervous of it, people are still learning about it.
I was going to ask, what's the difference between tokenization and crowdfunding?
It's a different licensing. Crowdfunding is pretty much tied to one specific project. So say, for example, I'm crowdfunding for you, Jeff. Then I'm raising money for your company and that's it. Right? Tokenization doesn't really have any limit. We can keep building and building and building and issuing more. So crowdfunding pretty much is a target, a limit, and you're finished. But like tokenization is almost limitless. So as long as you have the ability to meet your obligations and honor expectations, you have the ability to grow in perpetuity, where crowdfunding, if you're basically crowdfunding for, say, a new company or for a startup, your limit is the amount that you raise for. So I don't think crowdfunding and real estate go well together, but I think blockchain tokenization and real estate do go very well together. And I think they're natural alliance.
There's a few companies that are doing crowdfunding now for real estate. The company called Fundraise out there doing crowdfunding for real estate. There's another one, I think, also doing crowdfunding for real estate. There are quite a few companies that are doing crowdfunding in real estate. One of the things that I realized when I was doing a lot of homework on crowdfunding for real estate, the concern that they ran into was fractional ownership of real estate and the amount of tax burdens necessary to get it out and the cost of generating both SEC requirements to get in a crowdfunding product created an enormous amount of back-end work for a simple deal. And that's where real deals really kind of became complicated. You had so many investors in a specific deal, the amount of back-end work necessary to get out just the paperwork side on the tax basis of it made things extremely, extremely undesirable on the back end. Now, it would look very nice on the deal, but if it's going to cost you more in your cost, like some deals I've invested in, their cost of paperwork costs more than the actual profit by the time I'm done with it. And what's it really worth at that point? Sometimes we run into those things. If you're going to have such a small piece of such a pie, is your actual investment actually making you money at the back end? I understand you can sell and trade them on the open market because you're buying a coin, you can trade on the open market. But if the paperwork side of it becomes so aggressive because you're owning a piece of a real estate at the end of the day, because the coin's still, unless you tell me that the coin's not an actual ownership, it's more of an ownership of a fund, and then you're just paying fund fees and call it a day.
Well, Jeff, that you bring up a very good point, by the way, and I appreciate that. And you're right, by the way, the compliance is an absolute pain in the neck, 100%. The way that we've looked into it and the way that we're going to be moving down this road is using third parties for that, right? And, so we bring in a third party that basically brings the back office to the table and they do all the heavy lifting, all right? So regarding all that compliance stuff, when you're outsourcing it, the cost of it comes down significantly. I completely agree with you. If we had to do that, for example, in-house, it would be a bookkeeping nightmare and it wouldn't be worth it. But outsourcing it makes it very financially, the cost is very reasonable and the sacrifice is very small. And if anything, it adds an additional layer of security for investors because there's a third party essentially reviewing everything that you do and making sure that all your books and records are in order. And because, again, anything goes wrong, we're immediately responsible for it. So the compliance actually gives you a second layer of books and records, eyes on the ground, making sure that everything is running. So there's just like in a public company, there's very small margin of error for funds to go missing because, in private companies, we see it all the time. The funds go missing, borrowers get upset, people complain about fraud. Even in hedge funds, we see this all the time. I can probably name a good handful off the top of my head. And the same with private partnerships. And what I don't like about crowdfunding is I think it's just the mechanics of it and the fact that I think you can only raise, I think, 5,000 or 10. I forget the amount.
Yeah, I agree.
There's a limit.
It's not
There's a limit
a
in
great
crowdfunding
product.
that you can do. I'm not sure the exact
It's not a good product.
Yeah.
I don't like the
But
product either. That's why I never used it.
Yeah. But through blockchain, not that it's easier. If anything, the compliance is probably more strict than a crowdfunding platform because a crowdfunding platform comes with all the compliance done for you. You're basically paying them for the compliance that they've already done. And they've probably spent several $1 million on compliance to make sure that they can provide that service. The blockchain, you're paying for that compliance yourself. So you are at risk. But we team up with companies like T0, STO Box, Knightsbridge, and they bring their own compliance to the table. They also bring their own level of back office. And again, they handle so much of that for you. It's part of what you're paying for. But the boundaries are a lot more they're almost endless, and you can just keep going in perpetuity. And very much once you put your company on a crowdfunding platform, once you've done, you've hit your goal. And yes, there are many real estate projects that I've seen using crowdfunding techniques. We see the advertising on Facebook and Instagram all the time. So I do completely understand what you're saying too. But again, it's a question of taste. Some people like ketchup on their burger, some people like mustard, right? So I'm more a ketchup person. And I think if we were to debate crowdfunding versus blockchain, it would be a lengthy debate. But I do ultimately think that more and more businesses, not just real estate, will have the benefit from blockchain as we go forward, especially with digital currencies, doing business worldwide, global investors. And I think blockchain is something that we should all be considering for our business, no matter what that business is.
Okay.
Questions?
There's a question in the chat from Dan, and he says that the Japanese are buying major American home builders. Just curious if you're hearing about them tokenizing potential for investors with such.
So yes, the Asian markets are very big buyers of tokens. They really like it. The Middle Eastern and the Asian markets are probably, oddly enough, and the European markets are probably some of the biggest tokenized markets that exist today and are rapidly growing. America's a little bit slow to the game on it, but catching up. But yeah, the Japanese, the Chinese are definitely buying up. For them, buying tokens is like buying candy, especially when they're not expensive and the minimums are low, especially once you go retail. So it definitely opens up a lot of doors. And yeah, the some of the biggest marketing and distribution companies for blockchain companies are actually in Asia, Japan, China, Beijing.
Okay, we also have a question from Benjamin.
Mhm.
Benjamin says, what's worse for KYC, DeFi, if that's pronounced right, or crowdfunding?
Okay, so well, all the investments require a level of KYC. So um, right now, for example, there's 506 Reg D, there's 506 Reg S, and there's 506 Reg C. Don't quote me which one is which because I'm going to muddle that up terribly. But one is for the European market. I think that's the C. Then you have the Reg D for the American market. Again, don't quote me on that. And that focuses on accredited investors. And then you have a Reg S, which I believe is the non-accredited. And again, if I butchered that, I apologize. I wasn't ready for the question. But you have KYC for everything. At the end of the day, it's a real estate investment or it's a financial instrument investment. So every trade, every investment goes through what's called a third party, and they qualify the transaction to make sure it's legal. There's no money laundering, there's no fraud, and there's smart contracts to fill out and sign when you're buying them. When you're giving them someone, let's say, for example, I wanted to give them to Fiona, that's much easier. And then I have what's called a link, just like with a Bitcoin, and I can just send her that link and she can download it into her wallet because at that point I've already bought it. It's mine. I feel like we're losing a few people. Benjamin, do you want to chime in? Oh, that was his question. My bad. I apologize. Does anyone else have any question about blockchain and how it could be benefiting their business or hurting their business?
Yeah, I just wondered what is a decentralized blockchain? What does that actually mean?
Well, I'm not going to be the best person to answer that. Maybe Google might help chime in. But decentralized basically is worldwide, number one. And number two is they say it's unregulated, but it's not the case. Blockchain is quite heavily regulated by just about every country in the world. So it's not part of what's called, it's not a currency. It's not like a central digital currency controlled by a bank or by a treasury. Tokens are pretty much free trading shares internationally that you're buying in a company. So on the one hand, it's got a connection to money, while on the other hand, it's got a connection to shares. Now that might not be 100% the right answer, but it's not completely wrong either. It's probably a fair explanation.
Okay. I mean, I've also understand that. I mean, it provides, it's very secure, and it can build trust and reduce costs.
Well, reducing costs is, like I said, it's the goal of tokenization is to basically be able to liquidate illiquid equity in a business or in real estate. So if you take the illiquid equity, which is basically the amount of money that you can't borrow against, and you sell that equity, which is pretty common business practice, right? Then you've basically created like a technical currency in your business that now people can go and trade, right?
Yeah.
So it's like there's a fine line between shares, which you can't pay for things with, but you can make money off of, or say digital currencies that you can pay for things, but also trade. And the tokenization kind of floats between the two. So that's kind of where it gets complicated. So Benjamin has another question. What's the gap between regulation and the ability of thin central controls to actually monitor and enforce? Now, the answer to that is I don't really know the answer to that question because blockchain, just like everything else, has different international jurisdictions, and they're each one regulated by a different agency. So I can't tell you which accurately. I'd be lying to you if I tried to answer that. But every country in the US, it's the SEC, in other countries, there's different bodies, has a regulatory body that essentially oversees and controls that. The goals are three things really: no money laundering and no fraud, and also no immoral like earnings like drugs or international money laundering, and that obviously people are paying their taxes in their country, which obviously is everyone's own responsibility to do. So that's a good question. I will have an answer for you for next time. I'll be better prepared for that. I'll save it and come back next time with a question. Or maybe I'll just email you the answer if I get the chance, you know. So, all right, so we've covered a lot about blockchain and, let's kind of wrap it up on the blockchain side of things. Now, as some of you may have noticed, there's a few wars going on around the country today, right? And like, how do we feel that that's affecting business, like in the US and worldwide? Do we feel that the current war with Iran is having a negative or a downside on the US business economy and the country, or do you feel it's helping? Crickets, where's my audience today?
I would say I'll chime in. I mean,
Thank you,
we're gonna
Melissa.
stick it out on camera here,
For another 20 minutes.
just to be one of the odds. So I think that there is a lot of fear that obviously that it operates off of, that the world operates off of when we are at war. And at the same time, the way that it feels for those of us who also just feel things is that it's not really affecting business. There's uncertainty, and where there's uncertainty, then people tend to pull back because of that uncertainty. And at the same time, I think that it's not just the war. I think a lot of people are in the place where they're rebuilding. They're looking for something new to do. They're looking for a different outlet, a different whatever. I think this is probably one of the most uncertain times in the history of the world because nobody really knows. And so, is it affecting business? I'm not so sure that it's affecting my business personally. I think that it is definitely weighing on the real estate market. Now, how that will play out, I am not exactly sure. It will be interesting to see, but where we are in the area of country where we're located, there is tons of stuff going up for sale. And it's spring as usual, is what I would say. So, is there fear and uncertainty? I would assume that when it comes to some things, some people are experiencing, just like any other time, very bad times, and other people are experiencing whatever they're supposed to be experiencing at this time. So yeah, lots of fear, and at the same time, I think it is business as usual. I think the oil is the interesting part of all of it, because obviously we needed gas price and oil prices to go up, and yeah, it'll be interesting to see. But that's what I got for you, Adam.
Yes, anyone else would like to chime in on that or an
Yeah,
opinion? Jeff, maybe.
you have a new message from Dan.
Oh, I do. Let's have a look. Dan thinks the war is better for the US in time, money flowing back to the United States economy, like fighter planes and weapon sales going internationally, doing well for the US economy. Jeff had to jump off, no problem. Thank you for that, Jeff. Thank you for joining us. And
I can chime
personally,
in.
sorry, go on. Oh, Dan, you're with us? Welcome back, Dan.
Yeah, I don't think it's necessarily for just war. I think it's more for the inputs and the reliance on, and not being reliant on anyone for either the inputs for rare earth metals, the inputs for all the computers, electrical grid, technology that they want to build out here, I see that's getting them to see like we've only got a limited supply of actual inputs to build out this technology, and that infrastructure and that investing, I think is going to be heavy, big time in the United States. I'm seeing it within those sectors, like a lot of money flowing in and interest, which, as I keep telling people, I think small caps are the best way to invest in the US in the next couple of years to get out of that, to get the best return on that.
Well, they say war creates a lot of opportunity, especially in the US with so many military contracts. And that opportunity has what's called a trickle-down effect, where if the larger companies are doing well, then the smaller companies tend to benefit. It's not always true. We didn't see that during COVID, obviously, but generally speaking, war is generally good for an economy, though I will say that I haven't yet seen in this economy, obviously it's too soon to tell, how this war is going to affect the American people and change our lives with cost. For example, we've already seen during COVID, cost of living going up. We've seen during Biden administration, cost of living going up. During the Trump administration, well, we can't really say we've seen it gone down. All right. So it's overall, I think the American people are less well off than they used to be. And this war with Iran, if the what's it called, the Hormuz Strait gets closed off for any reason, will only hurt the American people. But if business can continue as business as usual, then it may actually be good for the economy. But in the real estate, I always find different markets have different effects, and we can't effectively predict that until we're looking at it right in front of us. Anyone else have a 2 cents I'd like to add on that?
You've got some more messages from Benjamin.
I see that. Do you want to read it, Fee?
Yeah. Well, he said there's a massive direct impact on logistics, but the impacts are somewhat delayed due to current volatility at the pump versus precision metals and the price of crude. Is it IMHO? This will be more clear in 3 to 4 weeks as we get clarity on what happens with the Strait of Hormuz and the price of crude. Price at the pump.
Yeah, that's true. We will see if the cost of gas goes up significantly. That affects everyone. That affects everything we touch, buy, and use. That would affect the cost of groceries. That will affect the cost of driving. That will affect the cost of shipping. All our goods worldwide will go up. And then we have to look back and say, all right, how does this affect our businesses? And that's a conversation for another day. But leaving it there, I think that over the next few weeks, we will see how that is going to affect us. I think it's definitely too early to tell. So, does anyone else have any questions, or should we wrap it up on a high note? It looks like a few people are a little sleepy this week.
Oh, you have Dan.
Oh, Dan, I see that. I think it comes down to all the money investing in foreign companies. Yes, well, the more money they invest in foreign companies, it doesn't necessarily benefit the United States. But if they're investing that money in the United States, then it would actually be good. So next week we are going to be talking about. We spoke last week about AI and startups. This week we spoke about blockchain. Next week, we're going to talk about the economy and driving factors that could help our businesses or hurt our businesses so that we could be aware for that and govern ourselves accordingly. And if you have any suggestions for an idea for an episode, please text me, email me, and I'll be happy to consider it. I want to thank everyone for joining us today. Again, for the people that came the second time, and hope to see you again next week, Monday, 5 o'clock Eastern Standard Time. Thank you, everyone.
Yeah,
Thanks, Adam. See you.